And it went at one point down to the bottom of that wick. It closed here.
Yep. So what happened
in that 30 minutes? That's the range. That was the volatility.
Exactly.
Okay.
Okay. So the crosshairs are a really good tool for measuring the size of candles and ranges and that kind of thing. And the way the crosshair works is you just simply click, drag, and you hold it. So you're whatever you're measuring, okay? And the number of pips on a vertical axis.
And a pip is a
percentage index point.
Okay.
I'll explain that in a little bit. But what this is, you see in the middle number there, 512. That's basically 51.2 pips. Okay. So, and we'll get into the significance of that in a little bit. Okay. I'm just trying to show you the basic tools and what what's in your tool belt, so to speak.
Okay.
Okay. There's also these angular lines, and that's a click and drag kind of deal, and you can adjust it and draw angular lines. And if you want to get rid of that line, just double click on it and hit delete. Okay. So you can adjust the scale both vertically and horizontally.
Okay.
And here, click and drag, same thing. So what we're looking at right now, there's a lot of lines and a lot of stuff going on here on this chart. And what you're looking at right here, this white line, is basically a channel, and it shows you the range. It also shows you the direction of the trend. Obviously, and also it shows you also the slope. How quickly the trend is going in a particular direction. Obviously, the steeper those white lines are, the more rapidly the trend is going in one direction or another. Okay. The other thing you're looking at is this blue dashed line. And when you mouse on it, you can see moving average 200. And what that is, it's a rolling average of the price action based on 200 candles in history. So it's a rolling cumulative average. And so when this candle closes, it will adjust this line a little bit. Okay. And the reason why the moving average is really important is that it helps us. It's kind of like the border of the United States and Mexico. Either you're in the United States or you're in Mexico. And so either you're in uptrend territory or you're in downtrend territory. And the 200 has a very big significance with a lot of traders. It's kind of like a psychological barrier. And you'll see a lot of times the price action will hit it and bounce off. So there's a...
How does it bounce off?
Well, you can see it right here. It got down to this area, and the buyers are buying this, buying this pair, the euro dollar. So it didn't have enough momentum to push through it. And so what happened is all these buyers started coming in. Oh, it's a bargain, like Greg Ganchek, for example. And I think he bought somewhere in here after this whole momentum thing happened. And so, but there's more pressure to sell. So it's hanging out on this guy. So it's not a downtrend or an uptrend. It's riding the line. So we don't know what it's doing. So basically, it's untradeable. It's very risky. The trade to have done was early this morning, because I mentioned this to you earlier when you first came in. Why did you go long on the euro dollar? I said, well, it's got to go up before it goes back down. And even if it's a downtrend, doesn't matter, because it typically bounces off this 200 moving average, and then it goes back up before it goes back down. It's that simple. So that's why I went long in the euro dollar this morning.
And you placed a trade and you closed it at 1%.
No, it was less than that.
Mm-hmm.
I usually shoot for 1% per day, not 1% in one trade.
Okay.
Okay. So today is going to be a pretty slow day with the trading because everything is changing trend, and the volume right now is very, very low. So there's not going to be a whole lot of trading opportunities right now. So, but that'll change tomorrow for sure. So the other thing you're looking at is this blue band, and that's really significant. It's called the high-low, and the blue is the top band. And what that is, it represents the highest price in the market for that particular pair. And conversely, the red, okay, is the lowest price that's been paid or sold in the market for 70 candles. Okay. So what happens is these guys are constantly changing and fluctuating and stepping up based on the count of the number of candles. Okay.
Okay.
So the 70 isn't important to you because we never change those parameters. It's something I know. That's the way I wrote the software based on the trading model. Okay. So I'm just kind of telling you. But it's significant because we're always looking for fresh cycles. And we're also looking for a second push, and I call it a push. And what happens is on a push, it drives this red band. It pushes this red band bottom down. You can see right here, this yellow ball pushed this red band down because the price was up here, it was floating along here, and then all of a sudden the price pushed it. Okay? So that's significant, and I'll explain a little bit more.